What's up everybody? Welcome to the Stocks channel. My name is Corey, and Friday in the stock market we saw more selling across the board and we're starting to hit some downside price targets. Are we going to break down through these support levels and go down for a next leg lower? First up, let's take a look at the S&P 500 SPY ETF. So let's crack open this chart and see what's going on in the stock market today. Alright, so Friday on SPY we were down 0.65% and we did hit that double top price target that I was telling you to pay attention to down here at SPY 433. I can show you very quickly how this measured move works is that we hit this double top, broke down through the neckline, so a full measured move below the neckline did bring us down to that price target, and you can see that we did satisfy that downside price target. So this is going to be a support level because a lot of people that were waiting for this double top price target now can see that target has met, and we will see buyers at this level. So there's going to be the possibility that this is going to be the higher low, and then we could start back up higher towards retesting that breakout level right around 457. Now, if we continue to see downside selling pressure and we break down through 433, you're looking for a retest of the support level here at 428. 428 is going to be a very strong support level, so if you don't see buyers stepping in at that level, that will be extremely bearish. So again, if SPY starts closing below 428, that will be extremely bearish, and we're coming back down to 420. And remember, I do think if we break down below SPY 420 that we are going to see a full-blown bear market this year. There's just no way that the stock market is going to be strong enough to go through another bull rally if we start losing these next key support levels. Now also pay attention to the volume, because even though we did see increasing volume on Friday, we still don't see that massive panic high volume selling, especially like what we saw back here in the end of January. So watch the volume closely, because if at any point the selling volume starts to dry up, especially near one of those strong support levels, that could be a buying opportunity and a great place to set your risk. So watch support at 433, 428, and below 428 we're coming back down to 420. To the upside, you need to see the resistance levels breaking at 439, getting back over the 20 simple moving average at 444, and then seeing the bullish breakout back above 450. By the time we get back above 450, we should also be back above the 50 EMA, because as you can tell, the 50 EMA is negatively sloping, so it is a moving target that declines each and every day. We do officially have the full bear trend because the 13 EMA has crossed below the 20, so you need to be very cautious at these levels. The 20 simple moving average is starting to flatten out, so if the bulls can get back over 444 very quickly, we could quickly reverse the bearish trend and we could start to see the bullish breakout very early in the week next week. So you'll need to be very flexible and watch the price action closely, because you have a very key level of ranges to follow, and you're going to be a lot more bearish below 428 and a lot more bullish above 450. Everything between 428 and 450 is going to remain a volatile whipsaw, and it's going to be great for trading as long as you're getting in and out quickly and you have great risk management. On the NASDAQ 100 triple Qs, we were down 1.14% on Friday, and we did come back down to this low right around 340, and so far that level is holding up as support. Just like I said on SPY, these are very key support levels that we need to see buyers starting to step in at, otherwise we are going to see the full-blown bear market this year. You can see the triple Qs also have the full bear trend, with the 13 EMA crossing back below that 20 simple moving average. So if we lose this support level at 340, we're coming back down to retest the low at 334. If we break below 334, we're going to start breaking out of some very key support levels, and we're more than likely going to see the bear market scenario. So watch 340 and 334 as the very strong support levels, and get a lot more cautious of the next leg lower below 334. The next leg lower could take us all the way down to 323, so you will want to be a lot more cautious if we break below this support level. Now to the upside, we need to see the bulls getting back above about 353 and then getting the bullish breakout back above about 358 to 361. Eventually, we'll need to get back over that 50 EMA, which is currently sitting around 367, but it is negatively sloping, so it is a moving target. So on the triple Qs, the bulls really need to start breaking back above about 358 to 361, and then things will be looking a lot more bullish, and we could start to run up here to retest some of these highs right around the 370s. So just be cautious and take it day by day, and on the triple Qs, your range is going to be the critical support right around 334 to 340, and your critical resistance levels will be right around 354 to 361. In the Dow Jones, we were down 0.79% on Friday, and we also came back down to a very key support level right around 340. Remember, on a weekly chart, if we start to see the Dow Jones closing below 340, it will be a confirmed double top, and as you can tell, a lot of these charts do have very large looking head and shoulders patterns. So these are extremely critical support levels across the board in the indices, and so far they are holding up, but that's obviously subject to change. So in the Dow Jones, if we start to see price action closing below 340, you're looking for a strong support level at 338, otherwise a retest of the low right around 331.5. If we lose that level, you're more than likely going to see the bear market scenario. Now the Dow Jones is looking a lot more bullish if price action can get back above 347 to 350 and get back over this 50 EMA at 352 and get the bullish breakout back above 356. Remember, we still have that gap to fill at 360, and that's the only silver lining for the bulls because we know that these gaps do get filled. It's not a matter of if, it's just a matter of when. So there's no guarantee we have to go fill that gap in any amount of time, but more than likely, if I were to have to make a guess, I would think this gap does get filled before the end of March, which means we could be putting in a very critical market bottom in the very near term, and we could start to see a very impulsive rally in the indices. Obviously, that's my opinion. You'll need to follow the price action, but if you start to see bullish breakouts, don't forget about that gap up there in the Dow Jones at 360. In the Russell 2000, we were down 0.86% on Friday, and we did lose that support level at 200, so we now have a lower low on the daily chart, but we're still above this support level at 197. So below 197, you're looking for a retest of 191, and below 191, you're looking for the bear market scenario where the Russell 2000 could go all the way down to 170 with support on the way there at 183. Your bullish breakout will be back above 207 and then back above 212, and only then should you be getting bullish on the small caps. This is very clearly a bear market, and it's very clearly no bullish breakouts, so don't get bullish until the small caps can at least close above 212. On the ARKK ETF, we were down about 5%, coming back down to this support level at $64, and if that level doesn't hold up, we're coming down to 60 in a hurry. I think $60 in the ARKK ETF could be the bottom, but we still need to break down below 64 before we can see that level. If we lose support at $60, things are going to get very ugly, and there's no telling how low this ETF can go. So below 60, we'll need to reevaluate this from a macro level view, but I do think that will be a strong support level. Your first signs of a bullish breakout would be a close back above 73, 77, and then 84. So don't get bullish until you start to see confirmation of the bullish price action. In the VIX on Friday, we actually closed lower, which is surprising because the rest of the indices were selling off. So this is actually a bullish indication that fear could be leaving the market. The VIX closed down 1.28%. Closed just below 28, and you can very clearly see a high wick on the top of that candle. So we're starting to see the VIX having trouble getting back above about 29 and closing in the 30s, which is a lower high from the previous high that we had in the end of January where the VIX was right around 32. So don't ignore the fact that fear is leaving this market, especially as we get very close to strong support levels. It's very easy to get overly bearish and just look at all of the news going on around us, and we've seen this for the last 2 years with lots of bad news, but the market can still be resilient. So don't ignore the fact that the VIX is elevated, but also don't ignore the fact that the VIX can't break out to a new high. Obviously, if we see the VIX breaking back into the 30s, that's more than likely going to signal the next leg lower, and we're more than likely going to see our bear market scenario. We can't get bullish until the VIX gets back below 20, so right now the bears still do have full control, but that can change very quickly coming into these strong support levels. On Bitcoin, we're currently trading below $40,000, and we're starting to lose that bullish development where we were starting to develop a bull trend. We're back below all the moving averages on the price action, and the moving averages are going back into a bear trend. So right now, the bulls need to hold up above about 38,000. Otherwise, we're coming back down to the lows right around 35,000 to 31,700. If we lose these support levels, we could see Bitcoin going all the way back down to $20,000. And this is very clearly a strong bear market. So don't get bullish on Bitcoin until it can at least break out above 46,000. On NVDA stock, we were down 3.53% on Friday, and we did close back below all the moving averages, but we did close on top of that support at 236. Intraday, we almost closed that gap at 228, but you can see the top of that gap did act as support, and we did close back above that support level at 236. Remember that these gaps typically get filled, so I won't be surprised to see NVIDIA fully close the gap at 228, and then we could find support and start to bounce with a bullish breakout back above 260. Don't get bullish until we can close above 260, and above that we still need to break and close back above 271. If we lose support at 228, we're more than likely coming all the way back down to retest the low right around 209, so watch that as possible price action going into next week. On Tesla stock, we were down 2.21%, and we did close just below that support level right around 860, which means we could be coming back down to 827. Remember, if we close below 827, I think Tesla is going into a prolonged bear market with much lower prices possible. However, if we hold above 827 and then we can get that bullish breakout back above about 940. Then we could see Tesla going back into another bull market. But right now, the bears are in full control with the full bear trend and breaking down through some critical support levels. So the last line of defense for the Tesla bulls will be 827, and below 827, you're looking for a much weaker, much more prolonged bear market. Some resistance levels to the upside will be right around $900, $940, and the 50 EMA is now at 956. On Apple stock, we were down 0.94% on Friday, and we did close below that support level at 168. So now if we lose this low at 166.5, you are definitely going to see Apple start trending down towards about 162 to 163. And if that level holds, we could see support there, and then we could start higher from there. However, if we lose support at 162, you're looking for a retest of 157, and below 157, we could be coming back down to 153. Your next bullish breakouts will be back above about 169 to 170, and then getting back over this high here right around 172.8. Don't get bullish on Apple if it starts closing below 166.5 because it already lost that critical support level at 168, which is signal that it's starting to get weaker. Also remember, Apple is a market moving stock, so if it is going down to 162, that will help it bring the rest of the market down for the next leg lower as well. The financial sector was very flat on Friday, closing right on top of our support trend line and very close to starting to lose the bull trend. So watch this as a very strong support level, and if we bounce from here, that will be bullish. The industrials were down 0.83%, closing back on support, but clearly in a full bear trend. The healthcare sector was down 0.75%, clearly gaining the full bear trend, and it could be heading back down to try to take out this low from the past. The energy sector was down 0.61%, but still holding up above a positively sloping 20 simple moving average and still holding on to the full bull trend. So jumping back over the S&P 500, this is definitely going to be a very critical trading week because we're at very critical support levels, and if we lose these levels, we could be heading into a full-blown bear market. So have great risk management and understand we do have a very elevated VIX, which means we're going to have high volatility and whipsaws in both directions. Don't ignore the fact that the VIX is failing to make a new high as we're coming into very strong support levels. There's going to be plenty of noise around with all of the news, so make sure you're following the price action because the price action is going to tell you everything you need to know. Trying to decipher if news is bullish or bearish is obviously a game that is best fit for the market makers, so all you need to do is follow the price action and you'll be on the right side of the trade. The market could go in any direction here because we still do have higher lows and we are at very strong support levels, so I never suggest getting overly bearish at very strong support. We obviously have downward trending, so you need to respect the trend, but don't get overly bearish at strong support levels. Also, don't forget that I do have Bank Trade Alerts, which is an algorithm-driven trade alert service that only trades the ETF TQQQ and sends all of your buy and sell alerts directly via email and text message. With all of this market volatility in a brand new trading year, I think now is the best time to be a bank member. You can find out all the information about Bank Trade Alerts and how to subscribe by clicking on the link in the description of the video. I also have the Stocks Channel Discord where I do intraday updates and analysis and bring new trade ideas to you weekly. If you're interested in joining the Stocks Channel Trading Discord community, you can find out how to join the Discord server by clicking on the link below. So thanks for watching, everybody. I hope you're crushing this market. And as always, I will see you in the next episode.